Good morning everyone. Welcome back to online class. In this class, we shall discuss about a new question with a new adjustment related to the chapter dissolution of partnership form. So in this class, one new adjustment is there. Be careful, listen carefully, be alert. So same type of questions they will ask in the examination point of view. So students, don't be neglect. So everyone must and should follow few rules and regulations, and also you have to very short time for your examination. In this year, Government of India and Government of Karnataka has decided to conduct the examination only for the second PU students who are pursuing in this year. So be careful and give more concentration. Don't hide the videos. Everyone must and should copy the videos, download the videos, and you have to thorough with that only. So we have to move to the question related to the chapter dissolution of partnership form. The following is the balance sheet of Diya, Disha, Daya and Deepa. So three partners are there as on 31st March 2020 as was as follows. Balance sheet is given, liabilities amount, assets amount. Under liabilities, creditors is there, bills payable is there, reserve fund, capitals, asset side, cash, debtors, investments, stock, furniture, buildings. So balance sheet total 66,800, 66,800. Very simple balance sheet they are given. And next line, this is that it was decided to dissolve the partnership firm on the details, and the details available are, so some details are there. Disha took over buildings rupees 27,750, Deepa took over bills payable at book value, and the other assets realized as follows. So out of that they are given debtors, investment, stock, furniture. And adjustment number 4, they will give on the realization expenses rupees 6,000, prepare necessary ledger accounts. So this is the information which is available in this question. First we should read the question, we should understand the question, we can classify the question, later on we will move to the solutions. Okay my dear students, before going to make a solution, just 1 second we have to make a clarification related to this question only. So here the information is there. The following is the balance sheet of Disha, Diya and Deepa on 31st March 2020 was as follows. So in the beginning of the question always they are given profit sharing proportion. But in this question they didn't given any kind of the profit sharing proportion. Instead of that directly they will given the balance sheet. Here you people have to assume that if the profit sharing ratio is not given means we can imagine, we can assume that all the partners are sharing profit and losses equally. So equally is nothing but 1:1:1, 1/3, 1/3, 1/3. If 3 partners means we will do like this. If 2 partners means 1:1, 1/2 and 1/2. If 4 partners is 1/4, 1/4, 1/4, 1/4. So approximately in this question they are given only the details about the 3 partners. 1:1:1. So 1/3, 1/3, 1/3. This is the profit sharing ratio. Before making the solution or classification we can imagine. So balance sheet is given, creditors, it is a liability, bills payable, it is a liability, reserve fund belongs to partners capital account, and the capital PCA, partners capital account, it will come. Asset say cash will come to cash account. Remaining all assets we should record in realization account step 1. Realization account step 1. Liabilities will come to step number 2 and assets will come to realization account step 1. And the next line they are given the information. It was decided to dissolve the partnership firm on the details available are. So these details they are given. So here, first point, Disha took over buildings at rupees 27,750. So here directly value is given. They are not given any percentages which is given in the previous question. But here directly is given. Disha took over. What they are going to take? Took over. The partner has been taken over from the business. What she's taken over? So she's taken over in buildings. The buildings is the asset. Therefore, assets they are taken over at rupees 27,750. Therefore, this transaction we will write two places. Number 1, realization account. Step 5. And again, partners capital account. Debit side we have to record it. You can imagine step number 5. It will come to credit side of the realization account. So it will come to credit side under the heading partners capital account, and we have to write buildings taken over. So step number 5 we should write the value. Again the same value where we have to transfer it, we will transfer to the partners capital account under debit side. Next step in adjustment number 2 we will see is that Deepa took over bills payable at book value. So this is the new adjustment for new people. So where we have to write realization account step 6. Step number 6, that means debit side we have to write. Again partners capital account, credit side we have to write. Opposite direction we have to transfer. If asset taken over means the it will come step number 5 and partners capital account debit side. Liability, bills payable is a liability. Though it is taken over, it will come to the first debit side of the realization account under step number 6, and again it will come to the credit side of partners capital account. 2 times we have to record it. Next, adjustment number 3. The other assets are realized as far as they are given. So here, other assets are realized means it will come realization account step 3. Again, bank account debit side we have to record it the value. Therefore, all the places we have to record it twice and all. And last point, realization account we will write. So realization expenses they are given. So realization expenses, realization account step number 7, that is debit side will come. Again where you have to write cash account. Cash account, credit side we have to write. So here finally we have to prepare necessary ledger account. So here necessary ledger account means which are the accounts we have to get made. One is realization account, number 2 is partners capital account. My dear students, so in this question they are given direct and indirect information. Both the information they are given, we have to think, we have to imagine, and we have to analyze later on the solutions related to the chapter dissolution of partnership form only. So here, my dear student, let us know how to prepare realization account in this concept. So for this account only we have 8 marks for preparation of the realization account. So remaining the 2 accounts will have only just 4 marks. 2 marks for the partners capital account and 2 marks for the exactly preparation of bank or cash account. But here for preparation of the realization account they will having 8 marks, so will be covered in this topic only. So PLN is very easy, very simple. 50% of the portion will be related to the balance sheet portion itself and 50% will be in the adjustment. Just we have to allot it and we have to get the marks only. So be careful, be alert, give more and more concentration for practical subject, then only you have to get 100% your goal. So first we have to go to the preparation of realization account. Realization account, and we will draw the columns for realization account. And we will fulfill the conditions also. debit and credit we have to write compulsorily. So particulars rupees, particulars rupees. So these are the transactions or accounts we have to write. So with the help of following some procedures, some steps, we have to prepare the ledger accounts only. So let's we have to discuss about the ledger account. So first we have to prepare transfer step number 1 to realizable assets at book value. BV is nothing but book value. To realizable, that means ready to sell assets. As we have to record it in their book value. Book value is nothing but the value which is available in the balance sheet without any changes. So first we have to write, we have 5 assets. First we have to write 2 debtors, 2 stock, 2 investment, 2 furniture, and finally 2 buildings. Debtors, stock, furniture and buildings. So here debtors, the cost of debtors is 8,600. The cost of stock is 13,700. The cost of investment is 10,000. The cost of furniture is 22,900. Sorry, furniture is 5,100. The cost of building is 22,900. So these are the value of assets where we will be available in our previous balance sheet. This is about step number 1. Let's move to step 2. Step 2. So no need to write this step, directly we should move on by external liabilities. By external liabilities. So here how many liabilities are there? 2 liabilities. Creditors, by bills payable. The value of creditors is 15,000 and the value of bills payable is 1,800 rupees. Only we have 2 liabilities, 5 assets which should be ready to realizable and also liabilities has to be taken. This is about step number 2. Let's come to the step number 3. What it will say is assets realized. Step number 3 always come to the credit side only by cash account. Why we should use the term cash means in the balance sheet asset side the current asset they are given cash just stored, so we have to write cash account in bracket. We have to write assets realized. Assets realized. So which of the assets realized where the information is given available means under adjustment number 3 they will give the details about the assets realized. So here some assets are there, debtors are there, investments are there, debtors, investment, stock and furniture. So the value of debtors is 8,000. We should write in the inner column itself. Investment is 8,950. We should write in the inner column only. Stock we will write 15,600 rupees, and also we will write the value of furniture is 4,500 rupees. So totally we have to record it all 4 assets only. So in the book value we should have a 5 asset. By realizing we have only 4 asset. What about one more asset? Whether we have to forgot to record, that is omitted to record, or else whether it will be more taken over by particular person. That we have to analyze. Now the buildings will be taken over, so no need to worry about that. Just we will make a total of this. While adding all four assets, we will get the value 37,050. 37050. This is about step number 3. Step number 4, what it will say is, so payment of liabilities. Payment of liabilities. But in this question, they didn't give the details related to the payments, that settlement of liability. But indirectly they will say that one liability will be taken over. What about the another liability? Nobody will be taken over. Even though that time we have to pay compulsorily. It is an ethical manner. As per the Partnership Act of 1932 will says that if any person wants to close the company, you can sell your assets. We won't give any objections related to that. But you have to pay all the liabilities you have to brought from the outside. So bills payable will be taken over, but creditors no one will take over. Even though we have to pay that one, it will come under step number 4. 2. Cash account. Cash account. In bracket we have to write liabilities paid. So we have only liabilities to creditors. So that will be same value without any value changes. We have to write 15,000 rupees liabilities paid. This is our step number 4. Step number 1, record the asset at book value. Step number 2, record the liabilities at book value. Step number 3, assets realize we have to sold the assets, that we have to write. Step number 4, you have to payment, that you have to pay the liability. And step number 5 and 6, assets and liabilities taken over. Step number 5 always comes to the right hand side, that is credit side. We will write by partners capital account. In bracket we have to write which partner is taken over by, who is that? Disha capital account. Disha capital account. Why we should write Disha capital account? What should be taken over? Buildings taken over. So some value they are given 27,750. So this value will also one more find. One is asset is taken over. So 1, 2, 3, 4 plus 1, 5 assets. So all the assets will be balanced. So we have 1, 2, 3, 4, 5 assets. That assets we have to take it over here. 5 assets plus 1. And step number 6, we write 2 partners capital account. 2 partners capital account. In bracket we have to write, we have to write this one, and we have to write what we take. Deepa took over bills payable. Who is taken over now? Deepa capital account. In bracket what should be taken over? Bills payable taken over. Therefore the value is bills at book value. What the original value is? 1,800. As it is, we will transfer to Deepa's account. Step number 6 is also completed. Step number 7, what will we say is always it will be related to the dissolution expenses or realization expenses. Here the expenses will be paid by the company, so we will write. So always step number 7 will come to the debit side only to cash account. In bracket, so cash we should underline this one, and we will write to realization expenses. The value of realization expenses is rupees 600, not 1,000. Sorry, this one is 600 rupees. 600 is there. Don't write 6,000. It is 600. Yes, 600. Now it's time to close that account. Just we have to this side we have a highest value. According to this question and solution, the credit side only we have a highest value, although we have to profit only. The total is 81,600. Every side you will get 81,600. Same value transferred here also 81,600. 81,600 minus all the values we will get 3,900. If we will give a star number for it and we will write two partners capital amount. In bracket we have to write profit. So what we have to do, this profit which should be distributed for all partners according to the ratio. If ratio is not given means we should distribute it equally. That is first partner Disha, second partner Daya, third partner Deepa. 3,900 into 1 by 3, 1 by 3, 1 by 3. Therefore, each partner will get the value is 1,300, 1,300 and 1,300. In the examination, while you have to close the account, leave the space for 3 to 4 lines. Page later on you have to close the account because the distribution will be get inside the total. Before the total only you have to write. If you cross that one or else you have to write outside means definitely it will be become a wrong procedure. So you should not get the full marks. So this is about the realization account. So first phase of account we have to complete it. Let us we have to move to the second phase of the account, that is partners capital account, that we have to prepare here. Next we have to draw the columns for partners capital account. Let's we have to draw the columns for partners capital account. So based on that we have to write. First point particulars. In the debit side we will write first part particular. First part is Disha, Daya, Deepa. Again credit side particulars. Disha, Daya, Deepa. Disha, Daya and Deepa. So these are the columns for which we have to prepare the partners capital account. So while preparing the partners capital account, we follow some steps. So step number 1, always we should transfer by balance drawdown. By balance drawdown, first we have to transfer the opening balances. Where the opening balances are available, always opening balances are available in the previous balance sheet under liability side. So here they are given. First partner 22,000, second partner's capital is 12,000 and the third partner's capital is 10,000. 22,000, 22,000, again 22,000 22,000, 12,000 and 10,000. The balances they are given. Next, come to the previous balance sheet only. So one more transaction is there which is reflected to our partner's capital account. The transaction belongs to partner's capital account only. Which is the transaction? They are given reserve fund. We will write by reserve fund. Reserve fund. The value of reserve fund is given in the previous balance sheet, that is 6,000. That we have to distribute in the ratio of 1:1:1. Therefore, 2,000 for one partner, 2,000 for one partner, again 2,000 for one partner. When making these three as a total, 2 plus 2 plus 2, we will get again 6,000 only. So therefore, all the transactions what we have to record it, that will be completed from the previous balance sheet. Now, come to the realization account. In realization account, somewhere we have to transfer the transaction that belongs to partner's capital account only. So here, in the step number 1, we didn't use the term partner's capital account, ignore. Step number 2, here also we didn't use the term partner's capital account, we should ignore. Step number 3, here also we didn't use the term partner's capital account, ignore. Step number 4, there also we won't use the term partner's capital account, ignore. Step number 5, we should use the term partner's capital account. Why? By Disha capital account. So where we have to go? Directly debits, credit side of this account. So while transferring this one, if we come to the credit side of the account, we will write to realization account. Realization account. In bracket, y means buildings taken over. Buildings taken over. So who is taken over? Disha. What is the cost? 27,750. 27,750, which is the cost which is taken over by Disha. So once we have to transfer debits, credit side of the previous account, and again it will come to the debit side of the next account. So twice it is completed. Let's come to step number 6. Again we have to use the term to partner's capital account. Go to Deepa capital account. What she will taken over? Bills payable will be taken over by Deepa. So where we have to get this value from the previous account? Debit side is there, so it will come to the credit side of the next account. So we will write by realization account. Realization account in bracket, we will write bills payable taken over. So who is taken over the bills payable? Bills payable will be taken over by Deepa. So directly we transfer the value, credited the value to the Deepa's account. So it will be taken over. It is a liability. It will be added to the capital balances. Now all 6 steps are there. Let's come to step number 7. We didn't use because it belongs to the realization expenses, that will come to the bank account. Step number 8. Finally, we have to wrote by partner's capital account. In that part we have to wrote profit. Where we have to get debit side, we will get the difference. So it will transfer to the debit side of the account. We will write by realization account. Realization account in bracket profit. 1,300, 1,300, 1,300, 1,300, 1,300. Now we have to close the accounts. All the transactions we have to transfer. We will complete the process. Now it's time to close the partner's capital account. So before making this, so in this question we will get the different balances from different sides. Sometimes we will get the total of credit side highest value, sometimes we will get the debit side highest value. So for the fixed partner, so debit side we have 27,750, but credit side we won't have that value. That means which side we have a highest value, that will be taken as a balance value. 27,750. Same value will get 27,750. Out of this value we should deduct all the value will get 2,450 as the difference, and we will do the new by cash account. This value will transfer to the cash account only. So then come to the second partner's total. So 12 plus 2 14, 14 plus 1 15,300. So here also 15,300. There is no difference, means we will write here same 15,300 and we will use only to cash account. Let's come to the total of Deepak. 10 plus 2 12 plus 1 13 plus 1 14 plus 800 14,800 plus 300 15,100. Okay, same value transfer here also 15,100. The difference is also 15,100. Now, what the difference we have to get the debit side, that will come to the credit side of the next account. What the difference we have to get from the credit side, that will transfer to the debit side of the particular account only. So this is totally related, newly adjusted quotient. It's just like a adjusted capital quotient only. So all the transactions are completed. First two phases of accounts we have to complete it. Next we have to move to the third phase of the account, that is the cash account. You will write cash account. Debit side and credit side we have to write, and all the conditions we have to fulfill. So in the debit side, first step we have to transfer to balance drawdown. Opening balance we have to transfer here. Opening balance, it is available in the balance sheet under the side of assets. In the beginning itself, 6,500. 6,500 we have to transfer here. Next, remaining all the transactions of the bank cash account which are reflected from previous two accounts, that is realization account as well as the partners capital account. So let's come to know, sometimes in the realization account, somewhere we have to use the term cash account. That cash will be transferred to the cash account of the opposite direction. Let's come to the realization account. Step number 1, we did use the term cash. Step number 2 also we did use the term cash. Step number 3, here also we did use the term cash. Is it right? No. Step number 3, we use the term cash account. What is that? Assets realized. Which side? Credit side. In the next account, which side it will come? Debit side we have to write to realization account. To realization account. In bracket we have to mention assets realized. Value already we have calculated, that is 7,050, 37050. Step number 3. What the total we will make, that we have to transfer, that same value we transfer debit side of the cash account. Let's come to the credit side. So step number 4, to cash account. Inside debit side we recorded. So in the next account it will come to the credit side. So we will write by realization account in bracket. What is that value? Liabilities paid. The value of liability is 15,000. 15,000. Step number 4. Let's come to step number 5. We didn't use the term cash. Step number 6. We didn't use the term cash. Step number 7. We use the term cash. So here, which side we have to put this value? Debit side. So if we come to the credit side of the next account, so we will write by realization in bracket realization expenses value is 600. So first account entire process will be closed. Let's come to the second account, that is partners capital account. So in the partners capital account, somewhere we use the term cash. That value will transfer to the next account with opposite directions. Let's come to the debit side. So here we will write to cash account balancing figure. This will be considered as a capitals. So where the first partner will only have difference, the second and third partner will have the difference. Which side we will get the difference? Debit side of which account? Partners capital account. We will write by Daya capital account, by Deepa capital account. Difference is already we wrote 15,300. And second partner, third partner 15,100. And the same partners capital account, we will use the term credit side by cash account, which for whose account we will get the difference in Disha capital account, we will write Disha capital account 2,450. So that will be there. So opposite side to Disha capital account 2,450 rupees. Now it's time to close the account. That making the total of this means 4,600. Sorry, 46,000, not 600. So here also we will get 46,000. This is the new procedure to new adjustment related to the question dissolution of partnership firm. Okay, my dear students, I think you people have been understood this one. In the next videos, we will discuss with a new adjustment in the same chapter, dissolution of partnership firm. Okay, students, do you people have any doubts related to this? You can directly contact me. I will solve your doubts. Okay, students, thank you everyone.